For more on what's happening in Europe, the summit, and everything else is Jacob Kirkegaard. He joins us from the Peterson Institute of International Economics, and he's a senior fellow there. Welcome back to Biz Asia America. Let me start with Europe, because the last time you were here, things have changed a lot. The markets are more volatile. We're worried about this interest rates. Let me start with the first one. How do you feel about the volatility and the impact it's having right now on the Eurozone as a whole, or is it just a short-term blip?
Well, I think the volatility that we have seen in global markets has actually passed relatively over Europe. I mean, yes, Italian and other Spanish and peripheral yields are up a bit, but the spreads over Germany are actually haven't exploded. So I would say that, yes, Europe is affected, but certainly nowhere near to the extent that we saw it last year, you know, when the United States sneezed, Europe caught a cold. That's not the case anymore.
Okay, stay with me on this question. The Federal Reserve, Ben Bernanke, says that the tapering begins, and which means basically interest rates might start to rise. So what's happened is that's given the US dollar a little strength. The stock markets have dropped off, and a lot of folks around the world are saying that's also affecting the US versus euro foreign exchange. It's weakening the euro because of the strength in the US. Could that affect, or does it even affect, the manufacturers or the economy in Europe?
Well, I think there's no doubt that the fact that the monetary tightening cycle is further advanced in the United States than in Europe. I mean, the ECB has been very vocal in the last couple of days saying, whoa, 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 we are not going to do any tightening anytime soon. That will put some moderate upward pressure on the dollar, but I think the reality is that it's not going to have a major effect. The euro and dollar exchange rate is not going to change materially, in my opinion, from where it is now.
There's this crisis in Europe. I don't want to call it crisis because this crisis is over for now. Of course, now that I've said that, now it's probably going to be back again. But on a more serious note, there's a lot of talk about, to get out of the crisis, there needed to be a banking union. And I point out the banking union because the banking union allows Europe to basically regulate each other and have one set of rules for all the countries so they all abide by the rules so that we avoid a future crisis. At this summit, is that going to be a major topic, and are they making progress on this discussion?
It certainly is a major topic because the banking union is it's a necessary but not sufficient requirement to get out of the crisis. And in the last week, we have actually seen some very important progress. The European leaders have agreed on rules for what they call direct recapitalization, which means that European institutions can directly take control of a bank in an individual country. And also, they have just agreed new rules for bailing in creditors in European banks so that it is not what we saw in Ireland, for instance, that it's the taxpayers that take the hit. It's actually the bank creditors.
I mean, that is, first of all, those are big words. But it's amazing that, you know, we're now here 2 years after this whole thing kind of blew up with Greece, and we're still talking about it. And I just wonder, do the leaders, do they think they did the right thing? And is the time for action has that kind of subsided? Is there a pressure to take more action now to ensure the safety of Europe?
Well, I think the reality is that with everything in Europe, you know, you have 17 or 27 countries and an individual parliament in each case. So you need a certain level of pressure, you need a certain level of crisis, basically, to get things done. And the fact that you have less acute market pressure right now than you had maybe a year ago means that there is a certain complacency kicking in. But having said that, we shouldn't underestimate simply the sheer complexity of what's going on. You're trying to integrate 27 different financial systems and basically fundamentally redefine what it means to be a sovereign country.
I can't even get my wife to agree with me on anything at home, so 27 of them is going to be very difficult. Angela Merkel, speaking of which, in Germany, are they happy?
Well, they certainly are almost certain to re-elect Angela Merkel. She has sky-high approval ratings. German unemployment rates is very low, not only compared to other European countries, but also compared to Germany historically. So by and large, no, absolutely, Germany is doing very, very well.
Always good to have you on the show, Jacob Kirkegaard from the Peterson Institute of International Economics. Thank you very much.